It was an interesting statement, especially in light with Judy Shelton saying on July 4th next year they will issue the 50-year treasuries backed by gold, the 250th year anniversary, and then Scott Bessent making that comment, who's, by the way, his largest personal holding is gold. So that's why me and a lot of others are saying, is it too coincidental that we're net importers of gold? We're seeing the largest delivery in the history of the COMEX happened on the February contract of nearly 6 million ounces, and JPMorgan delivering $4 billion in gold to the Treasury. And they say, Blythe Masters has said, and she used to run their desk, we don't buy it for the bank, we buy it for customers. So what customer has $4 billion in gold, $4 billion to buy gold? Is it the Treasury? The Fed? Who knows?
There's growing speculation about the U.S. government's potential involvement in gold accumulation, especially with Judy Shelton suggesting the issuance of 50-year gold-backed treasuries on the country's 250th anniversary. Scott Bessent, a major gold investor, has also made intriguing comments, while recent data shows the U.S. is a net importer of gold. The largest gold delivery in COMEX history occurred in February, with JPMorgan transferring $4 billion in gold to the Treasury. Since JPMorgan claims it buys gold for clients rather than itself, the big question remains, who is the actual buyer? Could it be the Treasury or the Federal Reserve? This could indicate a shift toward leveraging gold as a financial asset. Andy Schectman, a well-renowned precious metal expert, explains that the Exchange Stabilization Fund, ESF, managed by the U.S. Treasury, operates with little transparency and is primarily used to stabilize the dollar against other currencies. Initially funded with a $2 billion gold loan from the Federal Reserve, its actions remain mainly secretive. If global confidence in U.S. Treasury bonds were to collapse, it could severely impact the dollar's value. Given its purpose, the ESF could be used in such a crisis, though confirming its actions would be difficult due to its lack of transparency. Andy highlights that silver's value may be more strategic than many realize, especially as geopolitical tensions and resource nationalization come into play. Countries like China and India have accumulated silver for years, potentially exploiting price suppression in Western markets. With silver becoming increasingly scarce, only 25% of last year's supply came from dedicated silver mines, access to the metal could become significantly more complicated. If tensions with Mexico escalate, this could further strain supply, creating a perfect storm that pushes silver prices much higher. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
I could find out. I don't believe the Exchange Stabilization Fund. I mean, it is opaque, and it is managed by the Department of Treasury, and it's they don't really talk much about it. It operates very secretly, but its main goal is to stabilize the dollar relative to other currencies. I mean, I guess you could make an argument that that's if the world has lost confidence in the Treasury, the U.S. Treasury bond, that would certainly wreak havoc on the value of the dollar. And it's ironic too, because if I'm not mistaken, I'm fairly certain that it was initially funded with $2 billion in gold loaned by the Federal Reserve. And so could they? I guess they could, largely because everything I've ever read about it says that it lacks transparency. And who knows, if it's run and administered by the Treasury, yeah, absolutely. They could, I suppose, the more that I think about it. Its main objective is to maintain dollar stability. So yeah, I guess why not? You could make that argument that this is something that would be needed. It's an interesting point. I haven't thought about it, but I like it. I wouldn't put it past Trump. And quite frankly, if you think about what would happen if there was complete and total loss of confidence in the treasuries, yeah, that would not be good for the value of the U.S. dollar. So sure, I guess it could be. I don't know how I'd find out, but I can poke around and see. And look, silver, when you talk about all of the potential things, that's one that most people aren't talking about enough, is the geopolitical side of things and the nationalization side of things. And because price discovery has been muted for so long, which now seems to be something that being naked short to control the prices is maybe not as in style as it once was. When people realize what the real value of silver is, maybe they realize it's more strategic than anything else. And maybe this is why China has been doing what it's been doing slowly for a very long time. And India's bought 900 million ounces of silver. These countries have been using the suppression of the West for a long time against them. And all of these things against us, all of these things are turning into a perfect storm. If indeed things get more contentious than they already are with Mexico, yeah, absolutely. That could become a very big problem. You have a depleted asset. It's becoming harder and harder and harder to get. We talk about it being epithermal. Only 25% of the silver that came to market out of the 850 million or so last year were from silver mines. Everything else is byproduct. So getting silver certainly isn't getting any easier, and those are the kind of things that could make it substantially harder very quickly.
Andy suggests that shipping gold securely can be challenging, especially with USPS registered mail, which requires sealing all seams with postal register tape, something the post office often doesn't sell. While it's one of the safest methods, the process is tedious, involving multiple security steps and signatures at every stage. Alternatives like FedEx or UPS require supplemental insurance, which can be costly and isn't always accessible to the average person. For larger shipments, using professional assistance can simplify the process. If planning to use USPS, purchasing registered tape in advance is wise to avoid delays. Moreover, Andy points out that confidence in Western gold exchanges is eroding as delays in LBMA deliveries stretch from 1 day to 8 weeks. Meanwhile, exchanges in Dubai and Shanghai are gaining prominence, with China actively accumulating gold through mining, refining, and strategic government-backed programs. Massive delivery outflows from these exchanges indicate that people prefer physical possession of gold rather than cash settlements, further weakening trust in the Western financial system. Now, let's dive into the interview.
To make prices higher, the USPS would have to up their limit. It's crazy, to think of that you can't even send one tube of gold eagles by registered mail unless you have supplemental insurance. It makes it very difficult. We use FedEx with our supplemental insurance. We can assist people in sending things back, but I think we limit it to 125,000 per box. So 2 tubes you could put in, but it wasn't too long ago where it was 3 and 4 tubes. So USPS registered mail is very secure. It's signed for every step of the way, and it's not something that we typically ever see loss in. But can I just say, it's a pain in the ass. I mean, it really is for people who have never sent it back before through registered mail. It's challenging. You have to seal the box, and then you have to cover all of the seams of the box with postal register tape. And the ironic thing is the post office never has it. They don't sell it. They sell other things on the other side of the counter, but they don't sell register tape. And you can borrow it from them, and they'll give you that look. They'll give you a scissors and this big giant roll and a wet sponge, and you can do it. Or you can go like to a Staples and find the registered tape and do it yourself. But it's a lot of work. But it is the safest way for the average person. The average person cannot take these to FedEx or UPS and send it. If they know what's in there, they won't insure it. And so it's supplemental insurance that you must have, and that's costly, and average person isn't going to do it. So the easiest way to send larger amounts back is with our assistance. But if you plan on doing this, I would go and preemptively go to Staples and buy a roll of the nylon threaded postal register tape. It would make life much easier for you in the future. You seal the box with strapping tape, and then all of the seams, wherever you could stick an X-Acto knife in between the seams where they come together, you put the registered tape on it. And then they take their stamp gun and they stamp it all over it to know that it's never been messed with. And anyone who touches it, from the clerk at the window to every single person along the way, each and every time you see this kind of stuff, and you're seeing it again here now with the LBMA being a T plus 8 week delivery, it's supposed to be T plus 1 day. These things are, as we said earlier, eroding confidence in the Western system. And at some point, I foresee, whether it be the exchange in Dubai, which is already, in terms of volume, maybe even surpassed the COMEX, or the Shanghai exchanges, who have been seeing massive delivery outflows. And those delivery outflows are being sold to the Chinese people. That's part of the strategy of the Chinese, is that that they continue to suck gold in through the refiners and through the their own mining of it and whatnot, and then selling through copious deliveries through accumulation plans that the Chinese government has put forth to the people. And that's why Alistair would say, a couple of years ago that they had 38,000 metric tons a few years ago, 20 by the state and 18 by the people. Those numbers have to be much higher now. But what I'm getting at is that we're, again, losing confidence in the exchanges, which that's kind of, what we're seeing is people want delivery now. They don't want cash settling, and they always did.
As global financial dynamics shift, the growing demand for physical gold and silver, alongside increasing skepticism toward Western exchanges, suggests a changing landscape for precious metals. Whether governments are quietly accumulating gold, or investors are losing faith in traditional systems, the trend points toward a more decisive role for tangible assets in global finance. Could a potential gold-backed U.S. Treasury bond reshape global confidence in the dollar? How might rising silver scarcity impact industrial and investment demand in the coming years? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.